Surprise, surprise. The Bank of England are keeping their interest rates at 0.1%. That's the lowest in 327 years. This comes in as inflation rates are expected to hit 5% over the coming months, and that's just the official figures, not the unofficial ones, which are obviously a lot higher. Or the real ones, I should say, rather than unofficial. It also comes in as the Federal Reserve in America have announced that they're reducing their asset purchasing program. And it's a little bit of a lie. What they're doing is reducing their minimum amount of purchases. So it doesn't actually mean they'll be spending less. And that's significant because it just seems whatever we do here in the UK is somewhat followed by whatever happens in America. And I strongly suspect when the Federal Reserve raise their rates, we will just follow suit like many central banks around the world will do as well. Let's go over to The Guardian and see what they say on the story. The pound fell heavily after the Bank of England wrong-footed the city by leaving interest rates at their record low level of 0.1%, despite forecasting a jump in inflation to 5% next spring. Now, when it says the pound fell heavily, it goes on to say it fell more than 2 cents. You know, that gives people the wrong impression right there. Because looking at this chart here, 5-day chart, you can see, this is just on Google, it's not a detailed chart or anything. You can see it's dropped 2 cents, as they say. It looks like quite a big drop, but, you know, over a month, over a year, over 5 years, well, you don't even have to go to 5, 1 year. It's not really budged at all. Unless you're a day trader, it doesn't really make a difference to you. So it's just something they try to manipulate people's perception a little bit and make things out worse than they actually are. Because I can assure you, if the interest rates did rise, and especially if they rise any substantially, the pound would have fell a hell of a lot more than just 2 cents, I can assure you. And this is a reason why they're so hesitant to raise up the interest rates, even though they're faced with inflation. This is their official figures. They're expecting it to get to 5% by next spring. It'll probably be 5% on their official figures by the end of this year. But anyway, that's why they don't want to do it, because as soon as they raise these interest rates, equity markets, stock markets, all businesses, mortgages and everything will all get more expensive. This cheap money we've had, which will get a lot more expensive, and everything will start to collapse. The dead economy will be even more dead. It'll be, well, it's already zombified, but it'll be completely iced out, if you like. It'll be done. Now, I was going to read out all this, but there's not really much point. It's all a lot of mumbo jumbo. I just want to go on to say that when the interest rates start to rise up, that's when we'll see the economy come down, because houses will be more expensive to buy. They're at record prices right now here in the UK, and they're already hard for people to afford. So you put the interest rates up, it'll completely squash demand for houses. We'll see many more people run into the rental market, which means house prices will come down because no one wants to buy them apart from investors, and they want them at a decent price. But not only is it going to affect the housing market, it's going to affect businesses, the ones that need to get business loans, and obviously stock markets as well. It's going to affect them on a massive scale, and think how many pensions need to get paid through stock markets being propped up. It's a whole can of worms when they rise up these interest rates. That's why they're going to put it off for as long as possible. I mean, they're waiting for inflation to rise to 5%, and as I said, that's just the official figure. The real figure will be a lot higher, probably more like 8%, 9%. I mean, you speak to anyone, next person you speak to, just drop it in a conversation, say, oh, the price of certain things is going up, have you noticed? And I bet you they turn around and say, yeah, the price of everything's going up. And right now, this is just early days of what's to come. We're literally just at the start of, like I say, what's to come. We have got probably a decade of this. It's going to get a lot worse. We've not even scratched the surface yet. All through next year, all through the year after, it's looking more and more likely we're going to be going into a highly inflationary, stagflationary environment where the price of everything's going up, yet economic output is going down. See, standard of living's going down, yet everything's costing more to buy. And this is a lot different from what a depression would be. A depression, prices would come down as well to meet demand, the low demand. Whereas here the prices are going up, but like I say, economic output is going down. Now this brings me on to something else, because if the inflation rates are going to be that high, expected to be as high as what the forecast over the next few years, it's going to be a very good idea for you to pull your money out of any cash ISAs you may have, saving accounts, or even if anyone you know, it's definitely worth you letting them know about this. People in your family, friends, that kind of thing, because what it means is, even if you've got your cash in some of the best paying ISAs around, highest rates are normally the ones that you keep the money in for the longest. So even if you had your money in a 5-year fixed rate ISA here, and it was giving you back, just a terrible 1.61% at best. If inflation's expected to be around 5% next year, and it may not even go down in the coming years, you're going to be negative massively in real terms. So the question is, if this is you, and I'm not a financial advisor by the way, if you decide to do this, then more power to you. Not telling you to do this, I'm just saying it may be a good idea to, if you can put your money into something else which will actually hold its value or even go up with inflation. Or either way, even if you don't, it's worth just taking your money out, and then you've got the opportunity, because you're only going to get this percentage if you keep the money in there for that long. So think about that. In 5 years, prices of everything may be skyrocketing. You may have a chance to invest in something, because these are volatile times. There's opportunities right now as well, and especially over the next couple of years there will be, when things get even more volatile. And if you've got your money in an ISA like this, then I don't know why. Maybe you can enlighten me on the comment section below. It used to be a great idea. My mum always used to try and talk me into doing this, to try to get me in the habit of saving, but realistically it's been this way for a number of years. Savers are losers, just like Robert Kiyosaki says. It's very true, savers are losers. You're not going to win, especially in this inflationary environment. You should really be looking at putting your money elsewhere, in my opinion. And that's all it is, my opinion. I'm not a financial advisor, but you can clearly see here, if you run the numbers, you're going to be at a net loss. So I'm sure you think for yourself anyway, especially if you're watching a channel like mine. Always do your own research on these things and come to your own conclusions, because even if somebody on YouTube is right in what they're saying, well, that advice may not be great for you in your personal circumstances. But if this is you and you're definitely you've got money in an ISA account, then definitely check this out. Inflation's going up. These saving rates aren't going to keep up to it, even if they do. The real inflation rate is going to be higher than what they say anyway, so you're still going to be net negative. There has actually been times in the past, many years ago before I was born, where the savings rate was actually higher inflation rate, so you was actually onto a winner putting your money into a savings account. But that's not the case anymore. And as well, on top of all that, you've also got the risk of all the banks doing bail-ins, which I've done separate videos about, where they could just take all your money. So take that for whatever it is. These are volatile times, and if you've got your money locked up for that long, I don't see what the logic in that is, to be honest with you. Why not buy real assets where your money's going to go up with inflation? But anyway, I hope you got something out of this video. Make sure you like, comment and subscribe. Make sure you share this video to anyone who's got an ISA and they think it's a good idea. They may be very risk averse, and that's why they do it, but just let them know they're going to be losing out in real terms if they choose to carry on doing what they're doing. Thank you very much for watching, especially if you've made it this far, and I'll see you on the next one.